Hello, Paul Gerrard, and welcome back to this edition of PAS TV. Today we're going to discuss buying an investment property. And I want to start off by going back before you buy a property into the decisions that probably should be considered very strongly by everybody who's ever buying any property, whether it's their home or otherwise. And these concern your structure. Now, when we talk about a structure, we're not talking about a company, okay? Let's just step back a bit and say, let's start with your finance, okay? You're going to need to speak to a finance professional to determine what's your borrowing capacity and how's your loan going to be serviced. Then there'll be issues associated with that. For example, if you're going to borrow in one person's name or the couple, and that can affect servicing, so get that one right. So your broker's a good guidance point for that. Then the next step beyond that is, how's this property going to look for tax purposes? Is this going to be a negatively geared property? Is it going to be our own home, or is it going to be a positively geared property? That could influence your income tax situation. It might also influence your land tax situation. If, for example, one person already has blown their land tax threshold in a particular state, then it might be pointless in further contributing more property to that person if the other person has an available threshold. So all these things probably need to be discussed in greater detail prior to a purchase. You might even need to get legal advice. For example, you might be thinking of using a trust, or you might be thinking about using some other more exotic structure. You might even need financial advice if, for example, a self-managed super fund's involved. So getting it right is really important. You can't fix it once you've signed that contract. It's not that straightforward, okay? And it might even be impossible to fix later. So get it right from the start, and you have a far more effective outcome. You don't want to, for example, have a jointly owned property with your wife, and your wife's just about to go into maternity leave, and she might not go back to work for many, many years, and you've got a negatively geared property. All those losses that are shared with your partner will just sit unutilised in her tax return. And so being smart and just thinking through some of these issues prior to purchase is important. Key people you need to then get as part of your team: your broker, your accountant, your lawyer. And when we talk about that, I think it's important to define what we mean by a lawyer versus a conveyancer. If you don't understand the difference, it's important you do find out. Both can transact and convey a property. That's fairly straightforward. I believe you can even do it yourself. You wouldn't be wise to do that, but you can. The key difference is when there's a problem. A bit like do-it-yourself divorce or do-it-yourself any legal issue. Technically, yes, you can do it yourself, okay? But having a professional do it for you means when things go wrong, they identify it and fix it and resolve the issues then and there. Rather than have, let's say, a conveyancer, and you encounter some legal issue associated with the transaction, and then the conveyancer says, well, you need to now go and get legal advice. So you've got a bit of duplicated role there, so avoid that if you can. So before you buy, each property you look at, it's really important too that you understand the costs of finding and searching for a property. They are not tax deductible. Travel, not deductible. Inspections, not deductible. Some of those costs may well be CGT acquisition costs if it goes to purchase, but you've got to look at the cost of your search as being a personal expense, okay? So get that right, and so when we get to the tax sessions concerning owning a property, we can address that again, but for now, just understand those costs are not deductible. But what you do want to also understand for each proposed acquisition is, before I buy, what does it look like? What's this going to look like in my tax return? Now, we've included in our year-end tax pack this year a fantastic little tool to help you arrive at that sort of analysis. It's a very simple Excel-based tool, and it's called My Investment Property Estimator, okay? And that lets you look at some and model, what's this property going to look like for cash flow? What's it going to look like in my tax return? You'll need to then possibly speak to a quantity surveyor to get some sort of estimate in terms of how much depreciation might be available. All of which then might take your cash flow, equal a larger tax refund, and that tax refund will reduce your cash outflow, okay? So we talk about cash flow positive properties. This is one of the ways you do it. So prior to buying it, know what you're planning to buy for tax purposes. Simple as that. Also determine whether any first homeowner grants or concessions, stamp duty, etc. can apply. That can also strongly guide structure and choice of how you approach your property acquisition. And I think coming back to that issue of building a key team of people around you, this is where you then go back to those key people and say, here's the property I'm considering buying. Confirm with me that I'm going to the right thing and that this looks right, that the tax outcomes are as I suspect they are. Really simple, brief advice often, but really important to confirming your decision to buy the specific property or not buy a specific property are great. And the other thing, of course, do your inspections, do your due diligence. Get a pest and building inspection. Don't buy a dud. Simple as that. And of course, go back to your people on Property Chat and get their views and opinions if you're really stuck. So we hope that's been helpful to guide you on issues when buying a property, and we hope you continue to watch the rest of this playlist and jump ahead to any other videos that are of interest to you. Anyhow, look forward to seeing you in another session. Paul Gerrard, over and out. Cheers.